Hello, today is Sunday, the 26th of February, 2012, and this video will be about looking at upside levels using this Fibonacci calculation to try to figure out where resistance, support levels, all that type of stuff is going to occur within silver. You first need to find a range, and this is the longer term look of silver. This is going back a long time. In fact, the range was well over a full decade. And back in this time frame here I am talking about, hockey cards and baseball cards. That's where the future happens to be. Well, no. So whenever you make a play like this, you better be sure that the future probabilities is that it's going to be going higher, for if you're wrong, like any type of losing trade, you're going to lose. But this, we'll use an example to use this to find buying and selling points. So basically, you take the high minus the low, and the high is 8, the low is 4. You need to figure out, well, what's the best low and high? And you can state, well, this would have been the low. It might have been, but I like the 4 better because it was tested a little bit here, tested there. And then the high level, which was tested on several of occasions as well. So 4, 8, plus it's even numbers to make it easy. So the difference is 4. You multiply it by 1.618, or basically 161.8%, to the power of x, and then you add that difference to the previous low. Well, x here is 1, x here is 2, 3, 4, 5, and so on, so on, and so on. Let's move this chart out. Still the same, but less candles though. And there we go. This way it's a little easier to go through. We'll talk about different buys and sell signals in here. So we'll start off with the buying. Let's assume it's pre-range. You're bragging about everybody. Oh, silver's going way higher. I'm going to buy some. And I'm going to buy some more. Oh, it's breaking out. I'm going to buy some more. And I'm going to buy some more in here. And I'm going to buy some more in here. You bought 5 different equal orders. And now what you're going to do is you're going to sell when you reach a blue line for the first time. So you reach a blue line for the first time in here, and you sold, and it kept going higher. Well, what happens when you get to the next one? You sell again. So you've now, obviously, you got 3 positions left because you bought 5 and you sold 2. But here's the deal. You come back to this previous level of support, which is an area where you now buy. Now here's the kicker. When you come up to a level for a second time, then maybe you might want to consider one of 2 things. Either one is that you just don't sell at all and you ignore it, period. Or B, if you do sell here, you buy at a lower level. And I'm not just saying that because you can obviously see it on the chart, but I'm saying it because the more often you test a significant area of resistance or support, the more likely it is that you take it out. Furthermore, when you do find resistance at a level like this, oftentimes you establish higher lows, which then makes it scream that you're going to take a level out, sort of like in here. So therefore, if you're going to use this, maybe you buy here, or you sell here and you buy back here. I don't know. I'm just going to presume using the methodology, they don't even sell here. So you do nothing here, you do nothing here, basically. Okay, so the market's going higher, and then you find a sell point right in here. We'll put a little circle here to signify that this is where you're selling, and then it's going back lower. Well, let's buy here, and then as it's going crashing large, you got to tell yourself, am I in the right market? Because if I keep on buying as it's going down and it's done, then it's over. I'm going to lose a lot. But obviously, if you followed the fundamentals, followed all this type of stuff, then you would know that, yeah, it's a good time to buy. So just like in here, you're at this level again. This is now a 3rd time, 4th time, whatever. So if you do it with selling here, needing some sort of a nice low above this, then you would have worked out fine. But like I say, we're not going to sell an area unless it's the first time we are there. At this level in here, you built another sideways consolidation, and you were expecting, as it was breaking out, that it's going to go back to this level, which it didn't. So now as it's reaching this level, you've got to say to yourself, okay, wait a second, it established a level of resistance here, roughly around 19 an ounce. So this is 21. So I'm going to presume that a gain of only $2 or like 8% on a long-term view is going to be enough to establish resistance. Okay, whatever. So we get to a new level. This is a first time we've got to this level. That's the wrong color. Let's get a blue color. So you sell again. You get here again, and then you sell. So guess what happened? We came back down to the previous level. What do you think we do here? Yeah, we buy. So if you're using this type of ideology, then the next, what you do is pretty simple. You either buy here or you sell up here. So you're either buying at around 21 or you're selling at around 75. Because the next level is 75, 78. Therefore, if we just do a straight line and take a look at how each one is done, you got from point A to point B, that was a successful trade. Another successful trade, again successful, again successful, and again successful. So all the 5 that you bought pre-$8 range, you would have sold at higher levels. And you would have 3 positions left in this hypothetical example. One from here at 14, one again at 10, and one again at 31. And then you're looking again, of course, to sell at 75. So that's one way of doing it. Whatever you decide to do, basically by using any type of strategy, the best strategies you can use, then the better you're going to do. So let's take a look at what we got for today, which we have a quarter day chart. So now we need to signify a range, first of all. We need to signify that we're in a range. We'll start right off the original point was, which is right in here. So the question is, how well does this range hold? Well, there's no reason to change it yet. You had that little pierce below, but no, the original support held. Now the original resistance, in my view, didn't, because it got upgraded up to here. Originally it was here, but then when it was all said and done, it pretty much changed to there. So now we look at the high, we look at the low. The low's high is about 34.40 up in here. And the low is about 33. So the difference is 140. So basically what we'll do is we'll take the difference of $1.40 and we will multiply it by, we'll multiply it by 1.618. It's to the power of 1, so we don't need to do anything else with that. And that's the difference, and we will add it to the low. 33 plus 2 1/4 is 35 1/4. So that'd be the first area you would significantly stay. Yeah, that's where we're going to find a level of resistance, right in there. Now, obviously, right now it's not finding resistance there. Rather, it's finding support as of now. So what's the next level? Well, we can take the difference again, 140, multiply 1.618 to the power of 2, and that gets us 366. You multiply that, or add it, from 33, which gives us about 36 2/3. So therefore we know roughly around here. So let's assume that you're doing the same sort of thing that we were doing before. You were saying to yourself, yep, we're breaking through this range. Let's buy a little bit here. Let's buy a little bit here. Let's do what I did and consider this was going to be a breakout point and believe it right with this big red candle, which it wasn't at that point. You buy and say you bought this point in here. And then as it was breaking out, you bought again. So you bought 5 different points. Well, it meant that all you've done right now is you've sold. That's all you've done. Now, if it comes back down to 34.40, you buy. If it goes up to 36 2/3, quite frankly, you sell. That's what you'd be waiting for. If, of course, you're using this sort of type of methodology. And thank you for tuning into today's video, and have yourself a magnificent week. Bye-bye.